following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. And of course, this is the last day of the week. It's the last day of the month. It is the last day of the quarter. And it is the last day of the half year. Unfortunately, that also means that the days get shorter over here in Boston. That's a pity. All right. So the Dow's up 69 at 21,356. S&P is up 5 at 2425. The comp index, I'll have to change the page. Let me go there. The comp index right now is at, this is the large composite index and the NASDAQ. It's at 6152. It's up 8. The VIX is down 1126, down 18 cents. Had a screamer of a day yesterday, went into the 15s. Unbelievable. Now it's pulling back. We'll talk about the VIX because it's a very important session for the volatility index in terms of the weekly chart. And of course, we want to talk about all the weekly charts. What you're looking at right now, left side is the daily, middle is the weekly. Monthly on the right. This is Schnitzer Steel, 24.87, up 70 cents. It's one of the better looking steels. The others haven't really moved. It's looking very good. So since the 18, oh, this is very strong. Can you believe it? It went from 1865 on the 16th. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 sessions later, it's at 24.87. So I'm suspecting, yep, it could pull back a little bit. 22 is a very strong supporter. It's one to keep your eye on. Let's go to the numbers here. Let me just do this because the last day, and it's very important because of the weekly chart right there. I want to talk about that. So the Dow is on the 9-period exponential moving average. When you think of the volatility that we've had in some of the sectors, like the semiconductor index, the XLK, the S&P Select, tech stock, ETF, that is, the QQQ series, the Dow and the S&P have held pretty well. The Dow especially, look at this, right in the middle of a range, but it's done something that's very unusual. I showed this to my subscribers. First of all, the objective is to get to a D in the Chapman wave. From the lowest, most identifiable bar, you merely count each successively higher peak, peak A, B, C, and when you get to the fourth highest peak, that's when other things can happen, all right? So what I'd said to subscribers this morning is I went through, we know what happened yesterday, and something that we were anticipating could happen. Let me see if I can find this here. What does it say? It says, where are the two charts, right? Is that the daily? That's the daily. So in this daily chart for the 30th, that's today, what I'd said is this is the quickest that you can have a Chapman wave buy mode to a leg D or up or a leg D down, 7 waves. I used to call it the 7-wave form in the very beginning. And what did we do in 7 waves? We went from the peak G top at 21,535 on the 20th, and every alternate day there was a lower trough. And I spoke about that trend line. I spoke about the pattern that we talk about in the Chapman wave methodology, CD introducing the Chapman wave, and that is the falling axe. What is that? It's just a declining cone, lower highs and much lower lows. Okay? That's exactly what we got, and we went to a leg D yesterday. Once we took out that trough C, at the 21,310 level, that left you with a leg D that was unfolding. Turns out to be a Chapman wave 5, and that's the reason why I'm anticipating that there's a bounce that kind of lasts into Monday, could even be into Wednesday, and then some bad news comes along and we start to go lower. That's my thinking. But what's really important, and then of course in the 120-minute chart, if I can find it right here, yep, 120-minute chart, we've had a number of these Chapman wave 5s. This is a technique that I developed over the last 2 years or so. And the last one went to a trough at 2130, 21,310 in the Dow, 120-minute chart, and spiraled up. I call that X at a peak B minus at 21,487. And I was anticipating there'd be a sharp move down that would start Chapman wave 1, and then there'd be a bounce, and then we'd start to make lower lows and lower highs until we get to a 5 on the downside. The MACD and stochastic were very weak, but the stochastic was at a level that was attempting to have a bounce, and we were at a trough E, and that allows for a rally. Okay, now let's go to where we are right now. That's from last night. Now look at this. The Dow has to go to 21,536 today, but it has 4 3/4 hours, in which 3 3/4 hours to go to 21,535. Can it do it? I would put the chances of doing it at 1 in 2 million. There just have to be something spectacular that happens that's announced for you to get that kind of a rally. I just can't see it. So that says that the weekly chart is making some kind of a top. The MACD is turned down, deflected lower. The stochastic is still good, very good at 94%. And that's the reason why I've said to subscribers, think of this as a consolidation. Think of it as a rotational consolidation. But at the same time, now let's go through these things very quickly. The S&P, so the parameters for the Dow are resistance in about the 2190s. We've already had a 21,000, just touched the 400 area. So at this point, I'd say 21,390s, and support has to hold at 21,320 to 21,310. The break under that's very negative. All right. So far, we've got the Dow just consolidating in a sell mode in the daily. Nothing, no signal yet in the weekly. The S&P, same thing. Weekly is weakish, but hasn't broken down. Daily is in a sell mode, but really the trading range from 24.53 to 24.05 yesterday, 50 points. For a consolidation so far, that's not a big deal. What is a big deal is look at the determination of this arch formation to continue its pattern down. Okay, good. Now what we're looking at is we're going to just skip to the QQQ series. That's very weak. That's in a sell mode in the daily, and already a sell signal to a sell mode probably by 4 o'clock this afternoon in the weekly chart, because the MACD and stochastic are very weak, as well as the price under the 9-period moving average. Monthly chart's still very good in all time frames. In all the monthly charts in all the indices so far, very good. Now I'd like to just quickly go to the IWM, holding pretty well. It's even holding better than the S&P. And the weekly chart has gone to an E, and it's got this pattern that says, you know what, at 141.13 until it breaks 139.61. This is just sideways. Okay, so where are we? If you go to the SMH, very poor action. Sell mode in the daily and sell mode in the weekly. Monthly chart still very strong, but watching it closely. So if you go now and you go to the metals and you go to gold, gold is still very weak. It's down 3. It's under the 9-period moving average, but it's not breaking down. So it's having a low-level consolidation, whereas we're looking at some of the indices having high-level consolidations. But the weekly gold chart is not that good. So we'll continue as soon as we get back. Basil Chapman, Tiger Technicians Hour. Dow's up 64, S&P's up 5. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Everyone, we're back. So let's go to the question. That was a mistake that I made. I've always got these people who know the Chapman Wave very well, always correcting me. Yep, there was a trough right there. So we're at trough C in the gold contract. That makes a difference because that's saying that D doesn't have to be all that much lower, and a lot is going to depend on what happens to the dollar. The dollar right now is trading at 95.70. So, woohoo, an up day. 95.76 in leg E to the downside in the daily, leg E in the weekly. This is where you start to see whether or not there's internal strength. But the monthly chart is saying, oh, boy, if it closes on a monthly basis, this is not good. And in fact, if it closes here, which is going to, I really don't have a choice. I have to now put a down arrow in gold monthly. Woo, from the 103.82 area. I'm sorry, in the dollar contract, 103.82, January of 2017. Let me make a notation, 12017. Whew, that's deep. That's way below the 9-period moving average of 98.21. And it's suggesting that we've got to look at how further up the euro can go. We've spoken about this before. It's in leg D. I'm calling this D at the moment in the daily, leg E in the weekly. My contention has been that if the euro, which my target had been to test the 200-period moving average, and had just missed it back in May, that if it broke the arch formation and pushed higher, that it would then test the high of November of last year, which is at 1.129. Let's go to 1.13. Well, not only did it go 1.13, it smashed through it. And that's suggesting, both on the weekly chart and on the monthly, which has that lowercase m, which becomes a very bullish pattern when it starts to take out left side resistance levels. It makes the target of, I did this yesterday, I should know it by now, 1.361, May of 2016. It makes that a target. Now, it turns out that 1.161 is exactly the 200-period exponential moving average in the weekly. Well, if that's the case, then all I can say is it needs to get to 1.149. The moment it gets to 1.149, then that 200-period moving average becomes a magnet. Until then, it's a repellent, but it's starting to look very much like it wants to get there. The MACD is strong. Stochastics at 89%. So far, very good action in the euro-dollar currency pair. And you would expect that the USD JPY, the dollar Japanese yen, would be, because it has very often followed the dollar, would be coming down. No, it's climbing. It's in leg C right now in the daily. Should go to D, and that's the candle that I was talking about for quite some time. The candle of the 17th of May opens at 113.12, plunges to 110.70. Once you start to get into the bar, then that 113.12 becomes a target, and the high this week has been 112.92. So that's my target. Should make a leg D by Wednesday of this coming week, Tuesday, Wednesday, because it'll be trading while we're on holiday July the 4th, because it's international currency. Let's see what happens. Now, a couple of things I want you to do. The TLT, holding quite well. Yeah, it's down 16 cents. My contention is that the chart that we're looking at right here, of the triple yield chart, this is the white is the 30-year T bond yield, TYX. The TNX is the 10-year right here, brown. And cyan is at 18.56. It is the FVX, the 5-year T-note. They're getting closer together. But what's really important about it is that the turnaround in the 30-year needs to climb above 2.910, 2.9%. 2.91%, and then it's starting to get into an area that says, you know what? Oh, I should have moved this. So that's your support. Took out the support. This is the next level. I'm going to make it gray. Yes, I'm quite comfortable in looking at it that way, and that's saying that the 10-year. The big thing about the 10-year, if it closes above 24.10, it's at 22.79 right now, 2.41. That's going to be a breakout. I have to consider that that's a breakout. And that's going to impact, look, it's already a little bit impacting, just a little bit, the housing, Philadelphia housing index and the wood, global timber and forestry ETF pulling back here. So these are things that I'll be looking at over the weekend. Now, there are a couple of things that are very important right here. My thinking is that the 9-period moving average of 125.80 in the weekly chart of the TLT, the iShares 20-year Treasury Bond ETF, that's going to be very important. If it holds above there and it just trades sideways between 125.60 and 126.20 for about a week or so, that's going to suggest to me, yes, that yields are not going to skyrocket. They're just going to be holding from where they are and stay in a trading band. That's my thinking. That thinking will change if the TLT closes even one session below 124. 124, it's held so far 125, 124.90, 124.89. So I'm watching this one real closely. We're out position, took up profit. We're out the long position. Now, a couple of chart formations. This chart formation, lowercase h can go to a lowercase m. I meant to draw this in. I was talking about it with Tommy when I did the show with him. Tom's away, so I was invited to work with Tommy. Always fun. And that lowercase h has gone to the lowercase m. And what I said is, I believe, excuse me, I believe that the arch formation that goes to a lowercase m with the 200 period moving average being resistance, what I'd say is 24.22 should be resistance at the 200 period moving average. I wonder what it is. I'm not a big sneezer, except the Chapmans, when they go out into the sun, there's a certain condition with the eyes. We tend to all sneeze. That's it. Otherwise, that's it. It's the show. That's what it is. It's at 11:25. There's kind of some influx of something that filters around my office, and it makes me sneeze. So here we go. This is the H pattern. If there is a break into the 24.24s at any point, that's going to be very positive. But I think we're just stuck in a bit of a trading range. As I said before, after making those particular patterns in the Chapman wave to the downside, a bounce is highly expected. And this bounce should be a shorting opportunity in some areas. Now, I did say, and this is going to be very important, I did get a couple of questions, quite a few questions actually, I'll get to them in a moment. But I did say earlier when I was talking with Tommy that there are certain stocks that are holding very well. And I don't know whether it's just transitory, whether they just individually in areas that are just pockets of strength that have got nothing to do with the market. And we're trying to trade those. We're trying to put them out and put positions on there. And we're going to be looking very closely at, say, the XLF, which has pulled back. It hasn't taken out the gap from, it wasn't the gap was filled. It's trading at 24.66 right now, down 3 cents. It had a big spike up 2 nights ago when the news was about the banks. They passed the test with flying colors. The XLF, the S&P Select Financial Spider, soared into the 25s. 25.02 was the print high, and now it's trading at 24.66. Got to watch this real closely because the weekly chart is still quite positive. I'll be back straight off these messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So looking at patterns, it's just remarkable how often the same pattern is formed. That H that goes to the lowercase h that goes to the lowercase m, look at it, there it is. And if we take out the 24.18 support, to get a really big move up like we saw in the euro-dollar currency pair, in the monthly chart, doesn't matter if there's 2 minutes, doesn't matter whether it's 20 years, it's the same. A pattern is a pattern, it's human nature's pattern. If we take that out, the only way you can get a massive move to the upside if the technicals suddenly start to invert and become really strong, and it takes out the left side high, in this case 24.22, and then spirals above 24.2275 to break into new territory. And that says, wow, now you can get a cup formation from this this lowercase m pattern, and that would be important. But if it starts to close below, you could have an equal move to the downside, make this a fulcrum. So those are patterns that I love to talk about. And the reason why I thought this is very appropriate, I'm looking at the dollar DEDOW. This is the Dow Jones Germany Stock Index. The pattern is exactly, the price is completely different, but the pattern is exactly the same as the FTSE. So we're looking at it breaking down here, down 2.32, down 0.57%, 0.5% at 405.02 after a lousy day yesterday. And this is a peak. Gee, I now have a sell mode in the weekly chart of the Germany index. It's not the DAX, it's the one that, sorry, I said FTSE, I meant the DAX index. And if you go to dollar UK, I believe it is, TOW. No, if you go to dollar Great Britain, GB, TOW, yep, that's it. That's gone to a peak D. Look at this. Fast. Oh, I meant to go to show some of you who do Chapman wave methodology. Let me go back to that Germany one in a moment. This made a peak E. That is on the June 1st, was it? June the 2nd at 339.37. This is the same thing, except it's the Dow Jones index. This is the British index, UK stock index, and it's making lower lows and lower highs, and has plummeted from the 339 area to 326 right now. And I need to rechange. That's an A. This is a G/C in the weekly chart, G/C. But it's a sell mode, and it's a leg D. This is the reason why I'm a little bit nervous about, although the monthly charts are all very good, there are so many in Ds and Es. I just have to say, you know what? When you get to a D, remember what I showed you the rule? The rule is in the Chapman wave methodology. When you get to that D, doesn't stand for duh, it stands for be careful, or be careful, right there. So I'm watching this very closely. That's the reason why all you can do is you start your shorts, you go into the short position, and then you just hold them if the weekly starts to kick in, or you can add. So we'll see what happens here. So I wanted to do that. There's a question about that. Now let's go to the questions that were sent. You need an air ironer cleaner in your office. You know, maybe you're right. I don't know. Just I really don't sneeze all that much. It's just on the show. XRT question came up. XRT, let's do that. XRT is the retail, spider retail. Yeah, it's a little bit of a bounce here. Monthly and weekly charts do not look good at this particular point. RTH, same thing, but it's making lower lows and a peak D in the weekly. It's in a sell mode in the weekly, and that uptrend, that channel inside track support level is being tested right now at 80.44, the RTH. If it takes out next week, it doesn't even have to close. It just has to take out 79.36 and then close down. But it just needs to get to that 79.30s area. That's going to be very negative. And that would make me kind of nervous about the whole stock market. Question about Baba. So Baba is right now trading Alibaba. It had a high-level consolidation, and I always say that when you gap and you make this flagpole situation, look at the shorter-term time frame, because it's liable to make a peak D in the shorter term if it holds the base of support, and then you got to be careful. And what has it done in the 120? It's gone A, B, C, D, E, F. Peak F, top. Now it's chopping around. Okay, so Alibaba right now is up 21 cents at 141. I think they had very good earnings. It made a peak F in the week. I'm calling it an F for now in the weekly chart. and it's only a leg C in the monthly. Still looking out, it looks fantastic. But right now, I think it's, I think it's consolidating. It breaks out if it goes to 147.9. Let's call it 148. At 148, it's just an incredible stock. I don't know how it's going to do that, but if it does it, that's fantastic. And it breaks down and fills the gap if it starts to trade at 132, and it's at 141 right now. Big ranges. So it's acting very well. So good question about that. I hadn't looked at it in Nike. I did with, if you want to listen to the show at 10 o'clock that I did with Tommy O'Brien, have a look at that. We've got George in New York. George, how are you?
Basil, good morning. How are you today?
I was thinking of you just a few days ago. I'm saying to myself, George calls in. He sends me all these notes on Veritex, and I'm Valiant Pharmaceuticals, and for some reason, every day I forget to get to it. What a beautiful trade. Goes from the 12s when you were talking about it to 17.80 right now. Yes.
Right.
How are you?
Yeah. Very good. Very good. Couple of questions, just simple on Valiant. Where do you see support to add to positions?
Very good question. I think it's getting to an area right now where it should start having limited upside and it should start testing the support and the downside. So,
right.
As an add to position, I don't see any point in saying to you, all right, well, add to it 50 cents or $1 lower, because that doesn't really do much. What you really want is to have the buying power of buying something that moves very well, and you want to buy it as it's just testing really important support. So that to me would be at the 9-period moving average in the week is at 13.77. My suspicion is it's not going to actually touch that. It's going to stop somewhere between 15.70 and 14.50 if it breaks $16, but it must break the $16 by a week from today. If it does that, then have patience, and I would do that. Why do I talk about it as if it needs to come back? Because the breakout was at $14.55 where it double top back in mid-May, and my thinking is that it might touch that, but if it does pull back, somewhere just above it is the area of real importance. Why? Because my thinking is that candle of the 22nd, where it suddenly spiraled from the 13s to the 1573 area, that's where anybody who was looking at it decided, hey, I better get in. So that's saying to me, that's kind of the area. So can you hold on a second? Because I want to talk about the weekly and monthly. All right, we've got George from New York. Always love hearing from George, and we'll be right back. Dow's at 59, S&P's at 4. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So we are on right now with George in New York. And George, I had a question in the den. Someone wants to know, listens to you all the time whenever you call in. How did you choose Valiant? How did you get there?
Well, you know, from my past, the way I analyze companies, I analyze
Correct.
companies fundamentally.
Right.
So what happened was, once they had the problems with the pricing, I immediately went to my analysis, and I looked at my long-term analysis, and I like companies that have consistent earnings.
Right.
And that's what I looked at. And then I saw that they were having these problems on the pricing, and I knew that, of course, with the media, how they're going to play this up, that it's going to damage the stock price. So with that said, I said to myself, I wanted to do what I call a discounted cash flow analysis to see where my margin of safeties would be. And if you remember when this first started to happen, I told you I dabbled at the $28 price.
Yes.
Very small position, because as luck should happen with me all the time, I know that the price immediately drops after I buy something. So with that, it also enabled me, now that I owned a little of it, to start tracking the company and all the news and all the financials. With that said, I waited till it finally bottomed, and then I started to add to positions.
And I know that you were very pleased that they were selling off, although it's not particularly the areas that they were selling off. It was just that they were raising cash, and you thought that was very important.
Yes, absolutely.
Okay.
But, it's just when I do an analysis on a company, what I like to do is I look at consistent earnings, because it's as if you have a friend that comes to you with a business idea, but yet it's only an idea and they don't make money. I would rather look at the friend that has a consistent business and he's earning money, but he wants to build on the business.
Very good. I like that. So I like the chart of the weekly. This is, I make a big deal about how a price takes out in a weekly chart the left side resistances. And in a cup formation, there are a number of resistances on January, the week of the 13th of January of this year, 1755 was the high. A few weeks later, in February, a month later, it's at 17.14. And each time it's breaking down and finally goes down to 9. So all of a sudden, what we've got is a price this week that yesterday just sliced through all that resistance. And at 1722, it is very close. Well, 1755 is the high. But the high this week so far is at 1825. So it's getting to the point where I would like to see 2 out of 3 weeks where it consistently closes, can't go just above and break down. It's got to close above the left side high of importance, and that is $17.55. And if it can do that, especially 2 consecutive weeks out of 3. Let me put it two weeks out of 3. So it could do it 1 week, not the next week, but the third week it does. That to me would be really good action because it's building a base of support where people can look and say, oh, yeah, it's holding that. And they like to see that. Hey, I like it. I like it very much. Yeah. So that would be my
Basil,
re-entry.
Could I ask you another question? Could I ask you another question on a different stock?
Absolutely.
Again, let's go back to my loser, Staples, SPLS.
Yes.
Here's the question. In your local papers, any other news that I'm missing about the company at all? Because private equity is going to buy Staples for Sycamore Partners is going to buy it for $6 billion, which to me is a very low ball price, which I'm surprised.
It's a low price, but they've had a series of problems that are systemic to the industry. So that you could talk about it if you spoke about it 3 or 4 years ago. You'd say, hey, that is just an absolute bargain. But if you look at it in terms of the market being so spread out that it makes it so. I was just down at the CVS the other day. I look around and I say, hey, they've got my paper, they've got my ink. It's just it's like no more than $1 more than I would have paid at Staples, and I bought it. I said, hey, it's convenient. I'm just going to buy it, and I think that's really what they're looking at. There are so many ways that people can get the same product at a different place that I think it's. I don't know. I do actually. I have met the CEO.
I definitely agree. I definitely agree with your argument on that. But where I differ is they have an enormous online business we talk about. Their retail business has decreased since, let's say, 2016, 2015, respectively. It's down, let's say, 11% in 2015, down 7% in 2016. But yet, their online business has increased 6% in 2015, and it's only down 0.9%. And the online business is $10 billion alone, 10.6.
And there's no question that Amazon is pushing all the companies into being online, immediate. In fact, it's getting to the point where you say, I need, and as you finish the sentence, you expect it to be outside your front door. I mean, that's the speed that people are expecting. So I think that the new company that's taking it over, they must be fully aware of every single contingency. So I hope they can turn it around and that it comes back and becomes a public company. I've known a couple of people. One was the person who set their stores up right back in the very beginning. I think, gosh, this must be, how long has Staples been public? Let me just squeeze this chart. I think we're talking about the
1989. I bought it on the IPO.
Yep. Okay. Oh, very good. Okay. So this is going back, and he worked for them, and then I'm not sure if he was dissatisfied because things were too slow, whatever it is. He moved on. But I followed it ever since, and then it turns out that I know of the person who is the CEO, as a person who's married to someone that I know.
I remember you telling me.
Yeah, and I've never actually spoken about Staples, but so therefore I followed it. That's the only reason why I followed it closely. And I have to tell you that I get emails all the time from Staples. I'm even looking at a couple today I've got, and they're kind of dumb. I mean, it's the way they phrase it. You can't say the same thing every day. Bargain, don't miss. Where was it? Just a second ago, I looked at it, and I'm saying to myself, I don't know if business people want to see that all the time. You want something, you go there and you buy it. I don't have to be, there it is. Do not ignore. You're getting $31.99 instantly for Hammer's, whatever it is, paper.
Yeah, true. I saw the same one.
How many times can you get that? So I think they need something different there. But yes, I think it'll be private. And I bet in about 2 years' time they bring it public again, and
that's what I'm thinking. They're going to refloat it. And also, with that said, for us, yourself, myself, maybe the Tiger listeners, we should look at Office Depot and maybe if it should drop, possibly look at leap calls on that, because that could be a takeout once they go private with Staples.
You think both of them would be takeouts? That would be something. Yeah, I got ODP right now. I'm
Staples
looking
goes
at it.
private first, and then Sycamore would buy Office Depot and then merge it with
Oh,
Staples and
one
then
company,
refloat it.
of course. Hey, good. Hey, thank you so much for those ideas. Have a great weekend.
Basil, have a
Thanks
great
for calling,
weekend.
George.
See you out.
Thank you.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
We're back. Last section. Let me just do a couple of things here. ODP, I did some work on it. Yep, it needs to pull back a little bit. Yeah, I think I like George's idea. I'm going to be keeping an eye on 563, trading down 2 cents right now. This is Office Depot. You know, I've been in a couple. I find them dull. Well, maybe I haven't been in enough. I don't go that often either. I like Staples. Staples is nice and bright. It's good. I look at, Ruby wants to know if I could look at Nugget. Yes, wait, there were 2 questions here I want to get to. Nugget, I'm going to go to the 120-minute chart of Nugget. This is the gold. This is triple long. Nugget, come. There you are. Yes, so Ruby, I don't know what you're doing. All I'm saying is that 30.45, Nugget up 55 cents. A, B, it made a C1, C2, top in the 120-minute chart. Wow. I think, I wouldn't be surprised if gold is just trying its best here, at least to have a bounce, just a bounce, but it could be a nice bounce next week. So what I'm going to say is if you're in Nugget, I don't know about holding over, holding over the weekend. That's a tough one. All I'm going to say is I like the action, the divergence in the daily, the lower low, and the MACD is now good, and the price held. The stochastics higher. You know what? At 30.39, I'm not going to talk about holding it over the weekend. That's going to be up to you. But at 30.41, if today it even touches 31.74 and locks in and holds there, that would be really good action for gold in the very short term, and that would be the first sign to say that gold is trying to establish some kind of a base, and we're going to be watching the dollar closely because that base so far is held in the dollar, but if it slides lower, that's going to be a problem. If it does slide lower, this might be the opportunity for gold to move. So 30.40, I personally would put a stop in 30.18, 30.22. That would be my stop, and I'd raise that stop as it went up. Hopefully it'll move higher through the rest of the day. So, but holding it over the weekend, that's entirely up to you. Holding a triple, I don't know about that. Because you can't really trade it over the weekend. So be careful. Just real quickly, a grain. Wait, I said what's his name? I'd look at it. KOT. Oh, I hope I can find it before the break. Where did it go? KO. I'll find it here. There, KTOS. So the question, I can't remember who asked it, question about KTOS, it's acting, it's 1177. I've got it on a short-term basis as wanting to pull back. I don't even know what it's called. It's called Kratos Defense and Security. I like it very much. I like the weekly, I like the daily, I like the monthly, but on a very short-term basis, I'm not, unless it can get to 1250 by Wednesday, my thinking is it's probably going to chop around between 1157 and 1120. That's it. How about we do this? Today's Friday. I'll be here Monday. I'll be here Wednesday morning, and then I'm away for 2 days. How about this? Let's look at. I can't remember who asked me. Whoever asked me, please, if you're in the Dan, ask me again. Ask me again on Monday. I'll do a little time on it over the weekend. Let me write it down. KTOS. It looks very nice. But I'm just not going to do anything on the spur of the moment other than to say it looks like it needs a little bit of a consolidation, and that's all I'm going to say. And then the next question I had was right there was, could I look at, I did that, XOP, let's look at XOP. Where did it go? XOP in the remaining few seconds. I don't think I'm going to be able to get to it. Yes, XOP. This is a leg F. It's broken out to the upside. It's Logistics Inc. It's done really well. I think it's the same pattern in the technicals. I think it's going to be pulling back a little bit. So it's a 64, 67. Watch the 62, 90 support over the next 3 days. Maybe on Monday we'll get to it again. Nothing to do right now. So have a fantastic weekend, everyone. I'll be back on Monday. And have a great 4th of July if you're not going to be around. But check out my opening call. I think you'll find it interesting and hopefully helpful.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.